I'm Danielle Hale, Chief Economist at Realtor.com, and here's what you need to know in May. With a pause in rate hikes clearly on the table following May's Fed meeting and rate hike, investors and economists are closely studying the incoming data for clues. The employment report showed strong but slowing job growth and another drop in the unemployment rate. More recent weekly data on jobless claims have begun to climb higher and job openings continue to tumble. Meanwhile, inflation data paint a similarly mixed picture, with the annual rate receding to its smallest in 12 months, but certain components and monthly data showing some stickiness in price gains. With one more month of inflation and labor market data to go before the next Fed meeting, markets have honed in on two potential outcomes, with current odds on a pause at roughly 75% versus 25% for another hike. In the second half of April, mortgage rates climbed a bit higher before pulling back following the early May Fed meeting. With home prices high, mortgage rate fluctuations can be make it or break it for some home shoppers. But fortunately, volatility has been much lower this year compared with last. April data shows that housing inventory continues to climb relative to 1 year ago as homes sit longer on the market. And while we see a seasonal uptick in sellers, it's not as strong as in recent years, meaning that new listings continue to lag behind prior years. Price growth among the typical home listings slowed to its slowest since April 2020, as the median home listing price hit $430,000. A new high median home price is typically reached at this point in the year, but as price growth potentially dips in the months ahead, we may not see a new peak in 2023. The weaker momentum is evident in existing home sales, which slipped in March and April, but continue to remain above January's low. And the median existing home sales price declined for a third month in April. Hinting at how the lack of new sellers is holding back transactions, new home sales saw an uptick in March, and the price also rose. This activity is fueling builder optimism and helping new construction rebound, with single-family starts up modestly in April. Looking ahead, both buyers and sellers reported feeling better about the housing market in April, but concerns about market conditions and being able to find a home to buy are still top of mind for sellers. Taken together, these data point to improvement from a very low level, a positive sign, but not a herald of a new real estate frenzy. A cooler market offers some advantages, giving home shoppers who didn't want to or simply couldn't compete an opportunity. For one, the homeownership rate continues to climb. Another place this is evident is in down payment trends. After rising as shoppers sought to distinguish their offers while home prices soared, down payments as both a share of the purchase price and as a dollar amount slid in 2023. A drop in market competitiveness and easing down payments open the door a bit wider, but the hurdles to entry are still quite high for first-timers who don't have existing home equity to leverage for a down payment. Fortunately, there are a number of assistance programs available to help buyers cobble together a down payment, and this tool at Realtor.com can help buyers find programs in their area. Finally, I want to highlight two recent research reports that shed light on regional trends. Our March rental report showed not only that nationwide rent growth continued to slow, but that different regional markets fared quite differently. Rents slowed and even declined in some large Western markets, while in the Midwest, rent growth is much higher. The Midwest was also the key region for the top markets in the Spring Emerging Housing Markets Index that we do in collaboration with the Wall Street Journal. In both cases, housing affordability is playing a role in the continued activity we see in the middle of the country. You'll find all the details along with our housing data for download at Realtor.com/research. You can also follow us on Twitter for real-time updates.